Okay. All right, everybody. Thank you for tuning in. Hopefully, you're watching this, but obviously, you must be watching this in order to hear me say that. So that's kind of a little, I don't know, Twilight Zone thing there. All right. I want to talk about the ridiculousness of the Reddit crowd. Okay. And, whatever, guys. If you're in the Reddit crowd, whatever. I don't even care. Get mad at me, whatever. I don't care. Let me tell you something. I spent 20 years in the institutional trading world. I was a market maker for 2 years. I also oversaw the trading of maybe 12 or 15 different hedge funds. Okay. So I am someone who speaks with authority. I know what I'm talking about. I was there. Now, let me tell you something, all my Reddit friends who are losing money. You're losing money because you're making dumb decisions. You're losing money because you are guessing. You're losing money because you're taking ideas from someone else. You're not developing a strategy that's going to work for your personality. As a hedge fund trader and as a market maker, I can honestly tell you, swear on my grandmother's graves, I never once went to work thinking like, "Oh, how am I going to rip off the little guy?" All right, and good traders, when they make a mistake, they have some introspection. They reflect. They say, "What did I do wrong?" Bad traders say, "Oh, some hedge fund guy ripped me off. Some market maker ripped me off." If you think market makers or hedge funds are out there to rip you off, you might as well just shut this off. Don't even listen to me anymore and go do something else because you will never make it as a successful trader. All right? It's just that simple. Hedge fund traders do not go to work. Hedge fund traders do not get paid $1 million a year and go to work every day and think like, "Oh, yeah, how can I go rip off the little guy?" Now think about this. If you're selling something, are you ripping off the person who's buying? If you're selling something, you think the market's going down. Well, does that mean you're ripping off the person who thinks the market's going up, who's buying it from you? If you're buying something, it's different. You think the market's going up. Does that mean you're ripping off the person who's selling it to you? So if you want to be successful, come to stockmarketjobber.com. Forget all this garbage about, oh, hedge funds, this, market makers, that, blah, 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 blah. The hedge fund world is not as interesting as you think it is. There are plenty of hedge funds that go out of business. There are plenty of market makers that lose money. Now, I said this yesterday, and I'm not lying. You can just check out my blog. I think it's on my blog, or I should say our blog, me and my good friend Born to Be. Okay, what happened? I said yesterday, "Oh, this is probably an opportunity for a short or for some put buy." I would never recommend to actually short a stock of something that's in the Reddit community because the next headline could come out and everyone could jack it up. And if you think a stock is going to go down, I would recommend you buy the puts. Now, what happened yesterday? All right, so Tupperware. This is what we're going to look at now, got jacked up on some crazy reason. All right, this is a company that loses a lot of money. And what happened? Oh, God darn it. I'm trying to figure this out here to make this chart look good. Okay, so if you pay attention to me and if you listen to my lessons, you know that some price levels are more important than others. You know that support can turn into resistance. Why? Market psychology, buyer's remorse. People bought back here who thought they were the kings when the price went higher. But when it goes lower, a lot of these investors tell themselves, "Man, I made a mistake. I want to get out, but I'm only going to do so if I can get out at break even." So when the stock comes back up, you got these remorseful buyers placing sell orders at the level that was support. So remorseful buyers can turn support into resistance. This is a year ago, May 22, even more than a year ago. Where did Tupperware find a top? Where did it run into resistance? Forget all the hype, forget all the hoopla. The market knows more than you, than me, than all the commentators. Where did we find resistance? At a level that was resistance and support before. Success in the market, some price levels are more important than others. And the institutional trading world where I came from, I mean, I'm kind of quasi retired now, but I do have two kids going off to college, so I do want to have some kind of income. But we focus on important levels, we focus on trends, we focus on momentum, we think about psychology. We don't do crazy things like Gann theory and Elliott wave. Now, I just explained to you, why did Tupperware find resistance at a level that had been resistance before and support before? It's because of buyer's remorse. When you look at a chart, you got to think about the psychology. There are people who bought here who regret doing so when the price goes lower. There are people who bought here who regret doing so when the price goes lower. You have these people that bought here and bought here telling themselves, man, this sucks. But if I can get out of break even, I'm going to. So they place sell orders at the same level they bought at when the stock gets back up there. All right. If there's enough of these sell orders, it forms resistance. It creates resistance. The buyers don't push it up anymore. There's enough selling to fill all the orders, and that's it. And the bears take over. All right. Now we had a big move lower today. I told a lot of our students yesterday, and I don't usually give recommendations, and I don't want to do that. I believe that people should learn how to, it's the fishing thing, right? Teach a person to fish. Everyone has a different style. Don't look for someone who's just going to give you recommendations, because if they're so good at giving recommendations, they would be worth so many billions of dollars that they would not be working. They would be on some desert island somewhere. The best traders lose money, but they don't lose a lot of money. They get out of their losses quickly while they're still small. Other traders that aren't good, they hold on to their losers for a long time and they hope it comes back. So anyway, I said, and this is probably still going lower. Oh, look at this in the pre-market. It's aftermarket, it's down another 8%. A stock cannot make a move like this and have it sustain and hold up if there's no news. Now, maybe if there was news, they reported earnings, something turned around, they got a new product, they got rid of incompetent management. Okay, well, maybe that's a reason why it's up and maybe it stays. And man, I just want to put this in here. All right. So this stock was up 900% in about 2 weeks. If there's no news, this move cannot be sustained. And as we can see, we've already given back almost 40% of the move. If something gets really jacked up just because of what's going on in Reddit, and it's like kind of this like meme stock thing, well, it's gonna come back. It's the most sure thing I've seen in my 25 or 30 years on Wall Street. If there's news, that's different. Something gets jacked up just because it's in some chat room or some meme traders or whatever the hell they call themselves. Guess what? You go in a chat room and Reddit and you see people being like, oh, buy, buy, buy. What do you think they're doing? Do you honestly think they're buying? No, they're selling. They're telling you to buy because they're selling. They get the sense that the price is going to go down. So anyway, that's my spiel on Tupperware. All right. And while we're on this whole thing about the meme stocks, I just kind of want to, and if you're a Reddit trader, don't get mad at me. Listen, dude, I'm trying to help you make money. Just because I worked at a hedge fund or numerous hedge funds, actually. I actually was the head of trading at 3 different institutional money managers, and we had different products. Okay. Money managers have products. We have mutual funds that are for retail traders. We have institutional money management. We have hedge funds. A hedge fund is nothing special. There's all this mystery about them. The real main difference between a hedge fund and a regular institutional money manager or mutual fund is that the hedge funds get a piece of the action. If they have a big profit, they get to keep part of that. That's why these hedge funds managers that are successful can make so much money. For example, say you're a hedge fund manager and you have a thing where you're going to keep 20% of the profit. Okay. And you got $1 billion under management and you go up by 10%, it's $100 million. You get a $20 million management fee. Now, or I'm sorry, a performance fee. You get a $20 million performance fee. You get a management fee as well, which is very small, usually like 1 or 2%, but you get a piece of the action. Now, if you're a mutual fund manager, you don't get the performance fee. All you get is the management fee. And I want to bring this up here because I think this is really profound. And I think some of the people I talked to actually kind of got upset. But listen, I tell it like it is. All right. Back in August, and if you're in the Reddit crew, and I hope you are, because if you are, you're actually going to learn something by listening to me as opposed to listening to friggin' Roaring Kitty or whoever, Leaping Lizard or whoever the friggin' so-called expert of the day is. I will teach you. Okay. That's what I want to do. I want to teach at this point in my life. I want to teach. Now, if you remember last July, last August, there was this whole thing going around. Oh, Ryan Cohen, who was an investor in Bed Bath & Beyond, bought these calls that had strike price of $80, $85. And this myth went around that, oh, the market makers are going to need to buy the shares to hedge their calls. I'm not going to, if you want to reach out to me, stockmarketjobber.com, I will gladly answer you. I don't want to go into it tonight because it'll take me like an hour. But so that was the myth. That was the story. Oh, the market makers are going to rip this stock higher. Couple things here. First of all, and I'm speaking as a former market maker, you don't need to buy a stock to hedge your options. You could just buy another option. You sell the 85 calls? Well, you can buy the 80 calls. You don't need to actually buy the stock. So there was such a myth. The other thing is, if everyone is on the same side of the trade, if you go on to one of your chat rooms and it's like, oh, oh, we're all going to get on this side of the trade. Oh, the market makers, blah, 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 blah. The market's going higher. Guess what? If everyone is on the same side of the trade on Wall Street, we call that a crowded trade. What happens? If so many investors or the overwhelming amount of investors are bullish, what do? They spend their money. They invest their funds. When they are out of money, when they're out of funds, the market runs out of buyers, and the only way it can go is lower. Now, despite everything I've talked about, what happened here? Where did this stock find resistance? A level that was resistance before. The best traders know how to identify which price levels are important. This was easy. There was resistance at 30 here. There was resistance at 30 there. Why would there be resistance again? Well, there are people who bought here and people who bought here. Excuse me. I think I got some like kind of allergy thing going. I was in my karate class today. I was like coughing and wheezing. But anyway, people who bought here would say, hey, price went lower. I'm underwater. If it gets back to my level, I'm going to sell and I'm going to get out of break even. So you have enough remorseful buyers placing sell orders at the level that was resistance. It becomes resistance again. All right. So that's all I got to say for tonight. I just, I want to help people. It really makes me upset when I hear all this misinformation about what market makers do, what hedge funds are. There's people out there selling this bogus information. Some people sell information. Maybe they think it's good and they're trying hard, but they're wrong. Some people are just total scam artists. If you want to really learn about how trading works, join our community. Check us out. I don't have all the answers. I'm not a psychic, but I did spend more than 2 decades, and that makes me feel old, more than 2 decades in the institutional trading world. So I can speak from a position of authority. All right, everybody. Thank you so much. Check us out tomorrow. We do an 8:00 call every morning where we discuss the markets. Still thinking about what the format's going to be, whether it's on LinkedIn or this or that or the other thing. But you know what? If any of you out there have insight into live streaming and how we can make it easy as opposed to really complicated, let me know, man. Mark at stockmarketjobber.com or my partner and good friend Tony at OPS at stockmarketjobber.com. Okay, everybody. Thank you so much. I hope to see you tomorrow.